we're gonna invite Vitalik and Merkel to face off. Which asset is gonna win on the agenda? All right, so thank you for this. Next panel 5, we are going to talk about institutional BTC staking, opportunities and challenges. So I would like to invite our panelists, Esin from P2P.org, CEO, Laszlo Szabo from Kiln, Boaz Avital from Anchorage, Head of Product, Alessio Quaglini from Hex Trust CEO, and Tobias from Staking Rewards as a moderator.
Test, test. So, great to have you all on the panel here.
Sorry.
Great to have you all on the panel here. This is the institutional Bitcoin staking panel. Maybe a little bit of overview how we are trying to have the focus topics in this discussion. We will be, I'll introduce the topics real quickly, and then I would love for you guys to do a little bit of a intro of yourselves, maybe how you got into crypto up to this point today, to this stage here, talking about Bitcoin staking. But for this panel in general, we are touch upon the topics of institutional adoption for Bitcoin staking, some regulatory challenges and perspectives. It's really great to have some very compliance-focused players here at the stage. So there will be some great insights, maybe even from the security side of things, getting some perspectives, and and then in the end we will touch a little bit upon the future of Bitcoin staking. But feel free to kick off the introduction, Laszlo.
Yeah, of course. Can you hear me well? Miracle, by the way, what a talk. When Bitcoin proof of stake, happy to talk about that as well. So I'm Laszlo Szabo, co-founder and CEO of Kiln. And Kiln, we are the leading rewards platform for institutions. And I'm in the space for more than 10 years, but I'm happy to talk about it as well.
Just a intro or some thoughts about Bitcoin staking also.
Feel free to go however you feel.
Okay. I see we are not so popular like that Fisher from Babylon, because I know I saw his keynote. Yeah, my name is Esin. I'm CEO of P2P.org. I think I can say we are the largest staking and restaking provider. I'm not sure, do you agree or not? But it's my speech you already finished.
On staking rewards, we're bigger than you. But maybe staking rewards is lying in terms of data, I'm not sure.
No, it depends on the
getting
price.
Interesting.
Yeah, okay, I'm kidding. Okay, one of the biggest in the world, okay. But for 100% of the biggest in the restaking. Yes, it's about me, it's about the company. We fully focus on the Bitcoin staking. We dedicated some team for this because we are very, very bullish about Bitcoin staking. That's all, thank you.
Hey everyone, my name is Boaz Avital. I'm the head of product and one of the founding team of Anchorage Digital. We are one of the largest digital asset custodians in the world. I started one of
one of them.
But we are.
It'll be a spicy one.
Well,
let's see who's the largest.
We started back in 2017, which is when I got into crypto, when we decided to start. Basically a better custodian that could meet the needs of a digital asset ecosystem where people actually needed to use these assets on-chain, on demand, in real time. So because of that, we're actually one of the only custodians, maybe the only custodian, certainly in the US, as a qualified custodian that can be both 100% cold storage, so no hot, cold balancing, but also have on-demand transactions in minutes. And that allows us to be a great partner to institutions as well, which is part of what this talk is about. We're also probably one of the best regulated institutions in the world in digital assets. We're the only custodian digital asset provider in the US that has a federal charter. So we are a federally chartered bank in the US with staking as part of our federally regulated activities. And we offer a bunch of other fun stuff like trading and settlement and all the things that institutions really need.
Alessio, I'm one of the founders and CEO of XTrust. We are one of the largest digital asset custodians. But maybe one thing that is different, we're not in the US. We were originally born in Hong Kong, and now we have offices and licenses in Hong Kong, Singapore, Dubai, and Europe. And similarly to Anchorage, we started as a pure digital asset custodian. Today, we're basically a diversified financial institution. And most of our business revolves around, yes, wallet management, custody, offering staking services to our clients through some of our partners, for example, trading, dealing, and lending services.
Awesome. Some great intros. I really like that it's already getting very spicy here on the stage. Maybe as
But it's not serious spicy, you know.
There's some serious drama going on. Yeah, maybe for the first question. So Bitcoin basically originated after or with the financial crisis in 2008, which was a result of all the big institutional financial players in the space failing. So basically to decentralize the whole ecosystem. And now we are here on stage with 4 of the biggest institutional players. I'm not sure exactly who's bigger than the other, but maybe we find out. But in the space. So maybe as a first question, and whoever feels comfortable taking it can take it. Why do we need institutional adoption in the crypto space?
I'm happy. Oh, go ahead. Yeah, I'm happy to contribute to that question. It's an interesting question because institutional adoption is just adoption. Institutions, I mean, generally people who are crypto native naturally have some of this unsureness about, uncertainty about institutions and their motives. Ultimately, institutions serve either directly or very indirectly sometimes people like us. And so when most of the people, and certainly most of the capital that participate in the global financial ecosystem do it through permission systems that are these institutions. So institutions are distribution and institutions are adoption. Why do we need adoption in Bitcoin staking? Because we need the security that it provides, we need to increase the utilization both of Bitcoin and to increase the ability to provide security on the assets that that Bitcoin staking will allow us to secure, and we need the funds behind that, which will always come through institutions as a very large part. But that doesn't take away from the core characteristics of these assets, which is that anyone can participate in them equally to the institutions. And I think that is the real innovation.
Maybe let me be a little bit more controversial. I think we need institutional adoption because this whole market was born as a reaction to the financial system, as the failure of a financial system. But then after a few years, the industry realized that there was a ceiling in terms of money that could flow into the system. And then if the market were to expand, we had to attract institutional investors, the real money, into the market. Otherwise, it would have stayed as a niche, smallish kind of a market dedicated to people that wanted to be at the edge of the financial system. Now we are inside the financial system, and we are at, I would say, at a strange juncture because we want to keep the system decentralized, but at the same time, most of the Bitcoins are already, a big chunk of Bitcoins and other assets are in the hands of institutions under control of VASPs that are licensed, that are banks, that are under the control of governments. So we're kind of at a juncture where we created a system that should have been separated from the hands of the governments, but at the same time, we are kind of being regulated and under the control of governments. So we need to find a way to live together, but I don't think there's any turning back. There's only a way forward. So we need to live with institutions. We need to keep attracting their capital. And to do that, we will need to change the rules, and we are doing it, of how we do things. We need to make sure that the way we do things complies with what institutional investors are used to in the traditional world.
I mean, I like this idea of institutional adoption is just adoption, right? If we want this financial system to be more transparent, efficient, faster, and decentralized to a certain extent, decentralization is a spectrum, which blockchains and crypto is about, you need institutional adoption to grow the user base. Today we have what, 500 million of users that are touching crypto. If we want a majority of this financial and transactional system to live on blockchain, you will need platforms to offer staking, to offer payments, to offer rewards in general in crypto. And that means institutional adoption. So an ETF is a form of adoption. It might not be the most decentralized form of adoption, but that's better than nothing. Or a stablecoin, and a stablecoin reward is a form of adoption. And getting more rewards on Bitcoin, that's definitely another form of adoption.
To be honest, I have a question here. I know who are institutional player for you, because 2 years ago or 1 year ago, you could open our website like as a Kiln and P2P, and you can see institutional staking solution, and it means like as I know we fully focused on Anchorage, Hack Trust, etc., etc. But everything was changed when ETF was approved, and right now institutional a little bit different. And if you speak about a company like as a BlackRock or something similar, for me it's the good opportunity, because we will bring a new audience. New audience means new money and the increase of crypto adoption. Isn't it why we are here, right? I know crypto adoption. I know it will be better for everyone.
So that's actually a very good point, Alex. Maybe let's dive a little deeper here, because we have like some of the biggest custodians in the place who are working with a lot of these very big institutional players. And today we have a very strong focus on Bitcoin staking, right? With Babylon here at the event. Maybe your insights on who will be the first movers from your perspective for something like non-custodial Bitcoin staking, or from your side then enabled through the custodian. Yeah, your perspective would be great. Yeah.
Guys, before that you will start replying, maybe let's synchronize who is institutional for you, because 100% we know who is institutional for us, but what about you? Who is institutional for you?
Me.
For you personally, yes.
Well, we only cover institutions. So I mean, basically there are 3 levels of institutions in our business. Let's say the first one is the issuers. So whoever issues a token. You might argue that probably in the blockchain space, sometimes they're not real institutions, but they are the ones issuing the tokens, giving business to everybody. Then you have whoever buys the tokens, so buy side. And in the crypto space, yeah, I mean, obviously the size is a little bit different compared to but it could be an ETF that buys Bitcoin, or it could be family office, a venture capital, pension fund in the future. And then you have the service providers. So whoever does not issue tokens, does not buy tokens, but provides services to the ecosystem. So exchanges, payment providers, broker dealers, lending platforms, etc.
But what about the BlackRock and the similar company for you? I know.
Well, so these are basically, I mean, they fall into the second category. So I would say the buy side. Obviously, they are institutions. The thing is, we don't, as of today, I wouldn't say, apart from the ETF issuers, we don't really have real institutions in the business. We have a few growing, but I mean, we're still talking about really a few. And I would say they kind of, when we talk about institutions in the crypto space, we're actually referring to 1 or 2 probably notches down compared to when we were talking about institutional investors in the traditional space.
Thank you. But for the Anchorage, the same?
Yeah, it's pretty similar. I mean, I think more to your question. Sorry to hijack your panel.
Yeah, that's right.
Maybe I'll
Sorry,
try to
man.
answer.
We
maybe I'll
changed
try-
moderator here.
Maybe I'll try to answer
Fine.
both at once because I think I know what you're getting at, which is when we think about institutions, what are we thinking about on the range of, well, first of all, institutions are not natural persons. I think that's the one and most important thing. And when we say we're institutional, we serve corporates, we serve family offices, we serve funds of all kinds, hedge funds, VCs, asset managers, wealth managers, all throughout the ecosystem, big and small, from like the people who you're here next to maybe some like big household names that you've heard of that you'll see more and more announcements about in the future. And as an example, like we're an ETF custodian, and so certainly we serve institutions in that sense. But what you're probably thinking about is like the range of crypto forward institutions, so people who are willing to be less conservative with their on-chain risks that they take in order to get the returns and participate in the networks, all the way to like the super traditional, ultra-conservative type of institution. And that's actually the same range of institutions that we'll go through as we see adoption of Bitcoin staking, because that's the same range of institutions that we see as we go through any new innovation, as we saw in staking in the first place, and then as we saw in ETH staking, right, which really came and unlocked staking at the level of a level of return and a level of like asset and capacity that became much more worth it for the larger institutions that had a lot of capital to deploy. And now Bitcoin staking, which will hopefully, if the vision that many Bitcoin staking people have comes to fruition, will accelerate us even further. But the very first, so if you guys are not familiar with this sort of institutional space that we serve, the very first people who will participate in things like Bitcoin staking are the people who have a mandate to be on the forefront of digital assets. So the super forward-thinking crypto VCs, like the polychains of the world, and then the managers, that like small managers or the small family offices or the high net worth individuals who are always trying to do the cool new or lucrative new thing that's available in crypto. The people who are Bitcoin native, right, who are around the Bitcoin staking ecosystem, right, that support Stacks, that support Babylon, and then that will continue to go up the chain as we see it prove out and it becomes, the first movers move, then we see it become less and less risky, like we see that it works, we see that it's providing yield, we see that it's functional and reliable, then folks will get more and more comfortable. The thing about institutions, and that goes from people who have a mandate to people who are managing their own money, to people who are managing other people's money without a mandate, but accept the mandate to be responsible. So that's kind of the way that it goes. We will see that happen with Bitcoin staking, I think, in a lot of interesting ways. One of the interesting ways is as new chains come into the ecosystem, and at Anchorage we want to support all Bitcoin staking ecosystem chains, all the assets that are building with Babylon and on top of Bitcoin. We will see all of their investors and all of their participants and all their different markets come in as well.
Yeah, I have slightly different view. I mean, I agree with the categorization of institution you shared. I would say the simplest definition of an institution is a wallet with a lot of crypto, right? And then, of course, you can put categories on it. So you can say high net worth individuals, native funds, VCs, hedge funds, the platform themselves, the custodians, the exchanges, the wallets, and then the institutions, as we very often relate to them recently, which are like the large asset managers and the banks and the fintechs coming into the space. I would say, actually, we've seen demand for Bitcoin staking in all of these categories. And you might think, okay, the last category, which is the most risk averse, the asset managers and the banks. might think, okay, Bitcoin staking is a joke. We might never do this, or maybe 10 years from now. And actually, this is not the case. Some of them are testing it. Of course, the ETF in the US cannot even stake their ETH yet. So I'm not talking about this part of the continent, but talking about the other part of the continent. Because if you think about it, for an asset manager, it's going to be the biggest part of his business model, right? They have 4 times the volume of BTC compared to ETH. And if they can't get rewards on it, which they can't since FTX, there's no good rewards on Bitcoin. The lending rewards on Bitcoin are pretty bad. That's going to be very, very compelling. So of course, they want to test it. They want to see the risk. And Babylon or CoreDAO, CoreChain or Stacks, these are risky bets or protocols for them still, but they start testing it. Because the day they will put a lot of assets to stake, it will be important. It will be a very big volume, for sure.
Yeah, actually, you guys on the validator side, you are integrated with a lot of these big custodians who are working with all of these financial institutional providers. And how are you basically approaching the whole topic from how are you enabling them to stake with you? What are their biggest challenges, and how are you making it easy for them to get access to the whole staking industry? And maybe even like with a specific touch on Bitcoin staking, are there any specific challenges involved here?
We first of all, usually the first entry door of these platforms are custodians, and we have some of the largest custodians in the world on this panel. 2 of them, which is fantastic. And you have 2 of the largest staking providers as well on this panel. And so, they definitely want, usually staking is not enabled through the UI, right? So you have programmatic staking via the API, which usually you want to connect first because that's a faster way for a custodian to offer a staking flow, right? A secure staking flow from the custodian to Taproot and then lock to your assets, your BTC on the Bitcoin chain, and then start to stake or get rewards. So it's not going to be from the UI; it's going to be from API, and these are definitely the first challenge. You need to make the flow secure, work with the custodian to ensure that this flow is working, and then of course. The big challenge is just education, is explaining a lot to your clients. What should they stake, how much, how should they test? Because they're definitely not going to put 100% of the BTC at stake on Babylon day one. You can even, because there's a cap. So it's really about giving them a roadmap and a visibility on all these protocols. What are the 2 or 3 that makes sense to test at first, and then maybe explaining what are these protocol roadmaps and when they could put more asset at work.
From my point of view, I know we focus on 3 different categories of customers, or in this decision. The first one, it's management from different custodians, banks, wallets, exchanges, etc. And this our goal to provide the best net APR and the best method how we can avoid some risks. Yes, if I can take some risk, like a slash in Bitcoin, how you can cover me? How can I avoid any type of the risk? How can I avoid any type of losses? The second, it's about the integration. We allocated a team who can help integrate our solution from different ways, like as API or WebView or a different way. We fully focus for engineers inside the institutional, like the same, like the wallet, custodians, exchanges, and banks. And the third part, it's end of the customers. So we fully focus on B2B2C, and we would like to deliver a value for end customers of institutional, like as Anchorage or Hex Trust. We would like to provide the best experience for them, because no chances that we could provide some very, very poor UI, and the people will must understand what is it, how can I stake, what is my rewards. We will send a lot of messages to support and just block support of these guys. As a reason, I know we would like to avoid it. Again, three main things: APR, not APR, and the risk, speed of integration for tech team, and the value for the end of the users, the best user experience in the staking and rewards and BTC.
Maybe it's
Yeah.
also cool to get your guys' perspective on that from the custody side towards the staking provider.
Yeah, so I think the way the industry evolved, at the beginning, everybody started to build the whole technology stack in-house, right? From wallet management to staking to maybe trading, liquidity provider, order routing, etc. But maybe because there were no providers in the ecosystem that you could trust at the beginning, or the technology was not mature. I think we are at a stage that technology is quite mature, so the competitive advantage is not really on the technology. It's becoming more and more a commodity. So for service providers like us, what really matters is the service that we offer to our customers. That's what they look at. They don't care anymore about what kind of wallets we run, whether we use MPC, whether we use HSM, whether the nodes that we're running are our own nodes or run by somebody else. What they care is that the experience is smooth and that the pricing is their liking, and that the whole kind of service provision is done in a way that that they're expecting. So we've been working, and we work today with lots of different providers, even on the wallet management side sometimes, on data, on staking, on order routing, liquidity provision. And on the staking side, for us, it's really about building a one-stop shop where clients can basically manage the digital assets. And in terms of how we choose the different providers, or when we do it in-house versus using a provider, is really a matter of technology and regulatory concerns, issues, and pricing, right? So if there's a blockchain where we have a lot of customers and everybody wants to stake, then we will build it in-house probably. If there is a blockchain that is complex and we don't have enough resources and there is somebody that is highly specialized in building these things, and from an economical perspective it makes sense, then we would work with our friends and to make sure that the experience for our clients is maximized.
But how do regulatory concerns play into the choice of a staking provider?
Oh, well, I mean, these things are becoming complicated, right? So, for example, some regulators right now, they look at how you're running a node and where you're running the node from. So I'll give you an example, just a simple example. We're regulated under BARA in Dubai, and they regulate staking in two different ways. One is the pooling way, right, which is basically what exchanges do. You take money from clients, is basically they're lending to you, and then you stake, pooling those investments together, and then you return a yield. It's kind of more of an asset management / staking type of approach. And the other approach is really direct custodial staking. So from your wallet, you can stake. But in that case, there is a regulatory requirement in Dubai, which is very weird, that you cannot pool clients' funds in the same validator. So for each client, you need to create a validator, which obviously is extremely complex, and it cannot even be done for certain chains, right? So imagine Ethereum, right? I mean, you would need to find somebody that really has 32 ETH or multiples of that. Otherwise, you would not be able to run a validator for that client.
Yeah, I mean, I absolutely agree that the experience is what's most important. And actually, a lot of what our job is to do is to hide that experience or make the same experience for every chain, even though they're very different from each other. Working with the staking providers is very important with that. Ethereum staking was very different as an example. And the staking companies like these made great strides in making that easy for us to provide to the custodians. From a regulatory perspective, jurisdiction is king, so the first thing people look at for a couple different reasons, especially in the US for like tax reasons, is where are these validators living? And then beyond that, you know, also in the US we have if you're doing a pooling of assets, it's much more difficult to provide that in a well-regulated way than just direct custodial staking. But under Anchorage, staking is part of our federal bank charter in the U.S. We also have a MAS-regulated entity here in Singapore, and because of that, we get to provide customers the clarity that at least their staking is a federally regulated activity.
Okay, that's amazing. Maybe like since we we have this people here on the panel that are serving the custodians that have to deal with all these jurisdictional regulatory challenges, how are you guys? And like it sounds like it's not really that much differentiation on the technical side, but staking is becoming a more and more regulatory product, and you also need to build your product around it. How are you guys approaching this topic, especially with all the different regional differentiations like we just heard from Alessio and Boaz?
Yeah, but I think we provide the same solution. We are ready to do it for any location. I mean, like I say, if it's important for the customer to run a node in this specific location or outside US, 100% we could provide this. And the same, I mean, like I say, we also provide non-custodial staking, right? We don't have some issue around the license or regulatory if you speak about non-custodial. But for example, in ETH, like I said, it's a different example when you need to provide for some needs of a compliant MEV, right? And yeah, we also, we are very, very flexible from this point of view. I know from location, from technical side, from some specific requirements. I think that both companies cover the same. Yeah.
Yeah, that's right. It's very different to be a custodian or to be a staking provider, or to be a non-chain rewards provider. We offer on-chain and non-custodial rewards. So there's not a single regulator in the world right now that regulates non-custodial staking, which might make sense, right? So it's not lending. We can't steal the funds of our customers. These are sitting on-chain or via smart contracts, and there's a risk of slashing. So on this risk, actually, we meet the different regulators, MiCA in Europe, for example, or the MAS in Singapore, or different regulators around the world or in Asia, to make sure they understand that custodial staking or pooling staking in what the definition of what Alice is saying, meaning like you custody the funds, you pool the funds together in a custodial way, and you put it in a validator, which could be seen as asset management or structured product, is different than non-custodial staking. Yes, and we'll continue to educate the regulator so that we don't fall into this regulatory definition.
All right. We are running short on time. Maybe one last question. We already had some bold predictions from Mirko on the future of institutional Bitcoin staking. Maybe from your side, where do you see it in a few years? Let's say 10 years from now.
Bitcoin proof of stake. Woo! And actually, I have credit to Mirko because he really was the first one last year to get me excited about Bitcoin staking. Hearing him and it makes so much sense. The biggest value in crypto that you can reuse to secure the rest of blockchains or the rest of the ecosystem, DeFi, whatever sits on chain. And now this idea that, and seeing that many projects using Bitcoin as a layer to build, you might think, okay, well, is proof of work in 5 to 10 years the right consensus mechanism to see Bitcoin scale? Maybe not. That's why we did staking in the first place. That was at least one of the main reasons to scale on these blockchains. So hearing this idea of Bitcoin becoming a proof of stake blockchain in the next 10 years, I mean, if you would have said this 2 years ago, of course, a maxi even in 10 years might laugh, but that could be a very serious topic. I think that's very exciting. And then the next year, without taking about 10 years, if we start to see from, I don't know, let's say 3% of Bitcoin being staked via a Babylon stacks or whatever other offering in blockchains, that means that 40 billion will be staked, which means that Bitcoin might approach being the third or the second largest staking market. That's not too bad.
We need to be quick, one sentence each from now.
Sorry. I'm talking way too much.
You know, 1 year, I think it's no, not a good approach. I mean, to make some real prediction, because 1 year ago, when someone told you, guys, what do you think about the BTC staking? You thought, oh, okay, man, see you soon. Yeah, and also every day you can find some prediction about the crypto market, some specific chart, like oh, there's a signal for the bull market tomorrow morning, 100%, where you can see the pump, etc., etc. And from this perspective, I mean, I personally believe in BTC staking. That's a good approach. It's a good technology, especially from the Babylon and a different project. And Bitcoin to the moon. That's all.
I'm not one for numerical predictions, but here's like a possible future, especially focused on institutions. You have BTC staking. BTC staking allows you to secure more networks, which are more protocols and more ways to interact on the blockchain worlds. These create more useful applications and global applications that people can actually trust, which invites more institutional, trustworthy, and well-regulated participation that allows more access to everyone in the world to have access to what we consider today fringe DeFi stuff, but can be actually the way that we work across all of the ways that people access the normal financial ecosystem today through the institutions that they already use.
Quick one. Well, I think before even talking about Bitcoin staking, we need applications that people use. Right? Otherwise, 1.2 trillion market cap, even if only 1% of Bitcoin are going to be staked, where are we going to find $10 billion of rewards every year?
This is
$1
true.
billion
Where
or
are the
10 billion.
rewards?
I mean, it's not possible to use all these Bitcoins to secure networks if these networks are not used. Yeah? If they're not used, then there's not going to be available rewards, and the whole thing doesn't really make much sense. So let's focus on building use cases.
That's a great way to end. Let's focus on building the use cases.